Wrapped Bitcoin is a fairly recent innovation that effectively brings BTC to the Ethereum blockchain. One of the main use cases for Wbtc lies in decentralized finance. Imagine that you are already familiar with Bitcoin and are very interested in starting a DeFi application. But there is a problem. There are not many cryptocurrency bridges connecting Bitcoin and Ethereum. Wrapped BTC helps solve this problem, and provides much-needed liquidity to the DeFi protocol. Wbtc is an ERC20 token backed on a one-to-one basis with Bitcoin. In some ways, they are comparable to stable coins, although Bitcoin itself is not always very stable. When Bitcoin is wrapped, the cryptocurrency is kept in reserve by Trust BitGo. In an aim to be fully transparent, something other stablecoins have striven for, the amount of Wbtc in circulation has been made public, with evidence that Bitcoin, the underlying asset, is being held securely in custody. Wbtc can be wrapped, and opened, in a wallet as provided by CoinList. In short, they give digital asset owners the freedom to explore other blockchains. Most of the DeFi ecosystem, and dApps, are based on the Ethereum network rather than the Bitcoin blockchain. This can be very frustrating for BTC owners, as it means it will be nearly impossible for them to get involved unless they sell their crypto asset or buy something else. Since Wbtc network launched in January 2019, many DeFi protocols, including MakerDAO, Dharma, Compound, and Kyber Network, have begun to allow borrowers to use Wbtc as collateral. These can then be locked into smart contracts, with crypto loans typically paid out using the DAI stablecoin in the Ethereum ecosystem. The Wrapped Bitcoin project is overseen by the Wbtc DAO. To refresh your memory, DAO stands for Decentralized Autonomous Organization. There's nothing stopping you from using ETH as collateral on a DeFi platform. However, when measured in US dollars, Bitcoin's market cap is much larger.